What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So let's get into it. So it says here Dow, S&P 500, NASDAQ rise on US-Japan deal hopes with Tesla and Google on deck. They're on deck, people. They are on deck. So a lot of losses that took place yesterday were gained back today. That's what happened to my portfolio, and that's what I hope happened to yours. So it says here, U.S. stocks climbed on Wednesday after the U.S. struck a deal with Japan, lifting hopes for further tariff pacts as Wall Street got ready for Tesla and Alphabet earnings. So the Dow Jones Industrial Average rose more than 1%, aiming for its first record close of 2025. The S&P 500 moved up 0.7%. The tech-heavy Nasdaq Composite nudged up 0.6%, with both once again pacing for record closes. So the U.S. pact with Japan places a 15% tariff on imports from the country. President Trump said a step down from the threatened 25% duties set the hit next week. For its part, Tokyo will make $550 billion in U.S. investments. It's a great deal for everybody, Trump said late Tuesday. I want some of that 550. No, I got some. Either way, the major partner breakthrough lifted optimism that more trade deals will be sealed before August 1st, when Trump's sweeping tariffs kick in. So while negotiations with the European Union, India, and other large partners have dragged of late, reports on Wednesday suggested a deal with the EU was taking shape, while Treasury Secretary Scott Bessent touted progress with China. Economists believe that if tariffs then average out at 15%, that would be manageable for the global economy, limiting damage. But the stock market rally faces a big tech and Google parent Alphabet and Tesla's earnings due after the bell, and the market just closed a few minutes ago. The first of the Magnificent Seven to report. Tesla CEO Elon Musk's rocky relationship with Trump is looming large over the EV maker's earnings. With this stocks down nearly 18% year to date, investors are watching for updates on the company's core auto business and its robo-taxi rollout. I'm personally invested in Tesla and Google. It's a part of my ETF. So with Alphabet, investors are looking for signs that AI investments are starting to pay off as the company pours billions into the technology. A federal judge's decision that could force the company to sell Google Chrome will also be in focus. Ooh, that's interesting. So the reports should be coming out now. You just have to give it a few minutes. Or not. Either way, let's see what some of my stocks did today. So Nvidia gained, made some gains. It earned $3.75 today, closing out at $170.78. I was watching some of the YouTube videos. There are predictions that Nvidia may go up to $200 per share by the end of the year. If that is the case, that would be great. I'm also looking at investing into another. Actually, I already invested a small amount to this other stock. I'll go over that later. I actually just pulled some money from my account that I'm planning to transfer into my stockbroker's account in a few days. Yeah. So that was Nvidia. My information technology ETF, FTEC, gained $1.60 today, closing out at $203.73. My S&P 500 ETF, SPLG, gained 63 cents today, closing out at $74.61. I'm so proud of this ETF. I just remember buying this thing at, I think I sold some stock and I bought this ETF at around 45 bucks. I believe so. 45 or maybe 50. I'm not sure. Maybe 45. Either way, it is growing. I love it. Again, this ETF has the 500 largest American companies within it. S&P 500. It's the same as VOO, but VOO costs hundreds of dollars, and the same amount of returns are within this fund. And year-to-date returns, I mean, things are slow, and they will go up slowly but surely by the end of the year. But it has brought back almost 8%, 7.99% year-to-date returns. It's a lot lower than the year before, but things have been rocky this year within the stock market. But nonetheless, I would take that 7.99% return year-to-date over leaving the money in the bank and getting maybe a 0.01%, a 0.25%. And my information technology ETF has brought back a 9.62% return year to date. And then I think I stated it yesterday, and I looked at my portfolio not long ago. Again, my portfolio, the one that I manage, is up 32.49% year to date. Great. That's why you have to be in the market and not try to time the market. You know, the market was looking terrible earlier this year. A lot of people probably pulled their money out. I have learned to not panic, take your emotions out of it, continue to dollar cost average into the stock market, ensure that my investments are solid, do the research, I'm not changing a whole lot, and I'm up 32.49%. Yeah. Hopefully you are too. Anyways, Palantir. Again, a lot of stocks made their gains back. Palantir is up $5.55 today. Great numbers, five. Closing out at $154.62. Broadcom gained $5.10 today, closing out at $283.69. Apple, unfortunately, lost 25 cents, closing out at $214.15. Meta gained $8.77 today, closing out at $713.58. And that is it. Oh, the one stock that I mentioned that I bought a little of is IVR. It's a REIT. I was discussing this over the weekend with a friend of mine. Well, we were talking about another REIT. I used to invest in this REIT called RITM. And then I closed that out, and it was bringing back like over 8% returns. And then this friend of mine told me about a REIT that he had a small amount of that was bringing back 15%. So I went into ChatGPT, did a little more research, and I discovered IVR. And IVR stands for Invesco Mortgage Capital. This REIT has been around for over 10 years. Let me see, what year? Is it listed here? When did it? Either way, do the research. But I want to say it's been around, I think when I first looked into it over the weekend, it's been around since 2003. And it gives back an 18.45% dividend that pays out quarterly. And this dividend stock is currently $7.61. So then I looked into who's the biggest investors in IVR. And the top one is BlackRock. BlackRock holds about 6.6 million shares. And Vanguard holds about 3.43 million shares. And you have to think about this. BlackRock has about, again, do your own research, has like 12.4 or at least $12 trillion in assets. So just think about this. They have 6.6 million shares, right? So when you multiply that 6.6 million times 18% dividend, that's a lot of money that BlackRock is making for its investors. So either way, I bought some and I'm planning to buy some more. It's an individual stock. I'm not going to, my individual stock, my plan, or not my plan, what I do with my stocks is 50% of my investment, monthly investment, goes into my S&P 500. And that's my SPLG. 30% of the whole total amount of my investment goes into my information technology ETF, FTEC. And then the remaining 20% goes into my individual stocks, like Palantir, or I'm not buying any more Nvidia. I have enough Nvidia. Palantir, Broadcom, Tesla, so on and so forth. So I'm adding IVR to that list, and at the price that it's at, yeah. And I'm going to continue to track. But again, the dividend yield, and the yield for this is 18.45%, and it pays out quarterly. So what my plan is, I plan to have the dividends reinvested back into the stock. I don't plan on taking the money. And then, say in 15 years, I probably won't need the money. But say if I just wanted the money, because I don't plan on touching this money. Well, I may touch my investments at some point. Like if I want to buy a new car, I just take the lump sum out of my portfolio and pay for the car. I'm not going to have a car payment. Why? It makes no sense, right? If I have the money. But say at some point in 15 years, after heavily investing into this stock or my stockbroker's account, say if I still have this stock and now I have $1 million in it, instead of having the dividends reinvested, I may have the dividends, not that I may, I will have the dividends just paid to me. I could live off of that if I choose to, and that's something that you can consider. But either way, I'm not telling you to invest, I'm just telling you what I'm doing. So I'm going to end this video. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, because that's the only way you're going to make it through this world, is by thinking for yourselves. Don't allow anyone else to do it for you, and you should not be relying on anyone else to do what's best for you, because no one knows you like you. So, but disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only, and I express my opinion, right? So please consult with a financial advisor before you invest in any of your hard-earned money. Do your research, people. Do your research. And have a blessed day. All right, so you guys take care. Oh, get out of debt. I almost forget. Get out of debt. Get out of personal loan debt. Get out of car loan debt. Get out of student loan debt. Get out of credit card debt. And the only way that you can get out of debt is by creating a budget. So you can start telling your money where to go, so you can stop forgetting where it all went before the end of the month, right? So get rid of your bills. Start paying off the smallest to largest. I don't care about interest rates. Pay off. Continue to pay everything, but start trickling more money towards the smallest so you can get that out of the way. And then start the snowball effect, right? Get rid of all your debt. It may take a couple years. I don't know how much debt you're in. Get out of debt. And then once you get out of debt, you also, while you're paying off your debt, stop investing. If you have 15, 10, 5%, stop. So you want all of your money so that you can pay off, you want control of all of your money so that you can pay off your debt. Don't worry. You can start investing again. And then when you start investing again, you may be in if you were investing 5%, you can now start investing 15, 20%. You can max out your retirement. If you're over 50, you can invest up to 30,000. Then you have the employee match. Boom. So either way, pay off your debt. Then you create your 3 to 6 months living expenses. Then you start investing up to 15% or more into your retirement account. Put money into your kids' college fund if you have kids. And then if you have a mortgage, start tackling your mortgage with all of that free cash that you have now available because you have no bills. And then if you don't have a mortgage and you want to create one, save up to 20%, put it down, finance your home for 15 years so that you can pay that off early as well. And then if you don't have a mortgage, it's okay. You don't have to get one. If you want to continue to rent, especially now, rent may be less. Well, a lot of what I've seen is rent is currently less than buying because of the interest rates. So, but there's nothing wrong with renting. So don't feel the need to buy. Don't feel pressured to buy because owning a home is different than renting. When something breaks in that home, you're now responsible for insurance. You're now responsible for taxes. You're responsible for everything. Not saying that you can't do it, but just know that everything is now your responsibility. You're responsible for HOA dues, so on and so forth. But do what you feel the need to do. So yeah, that's it. I'm going to end this now. All right, so you guys like, comment, subscribe, share this video. Let me know what you think if you think anything at all. Until next time, peace.